Today I'm going to show you trades you could have taken by simply marking supply and demand on the 15-minute time frame. Alright, so all you need to do is try to simplify your trading as much as you can. I think oftentimes we have a problem where we're adding too many different variables into our trading. And then what ends up happening is you suffer a string of losses, which end up discouraging you from trading, switching strategies. So what you can do is just stick to one or two basic things and practice those over and over again. So when we're looking at this, we look for key areas where price may react. So you can mark your supply and demand areas. And when you're looking at this, you can see that we've got it marked up here, and all it is you can see where price broke through selling pressure, and we've marked this area as supply. Now you could change this if you want, and you could, there's no perfect place to add this, but you could see how you can adjust it. So price leaves. Again, you can see the push down here. This is another potential area. So you mark that as demand, waiting for price to come back into that area. And if it does, you're looking for a specific pattern to get in on the trade. So we have these areas marked. Now this one here, I've just marked this off as a potential area where price may come back. It doesn't mean that anything's going to happen there, but this is where I want to pay attention to. Now, when we drop down to the 1 minute, so you could see where we had our area marked, and price came back rather quickly. You could see how it came in once. Now, this could have been a more aggressive entry, but if you would have shown some patience to see what it's planning to do, it comes back a second time. Lots of selling pressure. And then what do we see here? Signs of exhaustion, followed by an engulfing pattern. And if you were really trying to target a large risk to reward, you could see that on the close of the candle, and your stop loss would have been just below the wick. So you would have targeted just before your supply area. And that was a 1 to 22 risk to reward. And this trade would have been 3 hours and 39 minutes. So you could see what time the trade, 6:21 in the morning to 10 a.m. Now, price comes into your supply area. Wait for price to come back a second time. Now, I don't think I would have gotten in on an aggressive entry because a 17 pip stop loss is fairly big. Comes back a second time. You could have entered in there. So on the close of the candle, just before the candle closes. Now, this was a 10 pip stop loss, which is a little better. Now, with this one, you could see that the trade is still playing out. If I was targeting the demand zone here, this would still be in action. Second here. So if I was to get in, oops. All right. So we were targeting that demand zone. I would have gotten out, sorry, somewhere around there. And you can see the potential is almost a 1-to-7 risk to reward. Doesn't mean that that's going to happen. And you can see right now that currently 1-to-4, 1-to-4.27. And right now it's about 2.5 hours before the market closes. And really, I wouldn't hold on to a trade unless it had a lot of distance. Now you could see right now it's about 43 pips from where you originally entered in on the trade. So you could stay in the trade if you wanted to. I like to see plus 30 pips to even consider that. But there's always a risk that it can come against you, come back against you. Now, especially if you're doing a prop firm challenge, they'll likely consider those gains when you move into the next trading day. So if it decides to come back and stop you out, then you're going to lose all of that in the process. That'll be a strike against you. So how long was this one in? This one here. Oops. You can see with this one, 4.5 hours almost. Now you could have easily as well targeted different lows depending on what you want to go for. So you could have went for this one here, which was a 1-to-2.36. This one was a 4.16, and you could have gotten out there. And that would have been a good day. So those are two trades that you could have gotten into today. Just by marking your areas up on the 15-minute chart, looking for price to push down. And when you're looking for the push, you're looking for something a little more aggressive. You don't want to see small candles pushing through. You see large candles like this. Again, here. So once you've seen that you can mark your area as a potential area to get in on the trade. And if we take a look here, now CAD JPY, this one here is another example. We're not going to look at the 1 minute, but just to give you an example of potential areas, you can see supply and demand marked. Why did we mark them? You could see large candles pushing away, buying or selling pressure that stepped in, breaking structure. So we look at those as potential areas. to get in on a trade. Now, this was over a couple of days, but you can see how price came back into the area. And if there was an entry pattern that you're looking for, you could have gotten in on the trade. You could have targeted the next area of demand that we had marked off here. Could have got out just before that, and that would have been a good run. Could have also tried getting in on a trade at that point and targeting supply, getting out before that. And you can do this over and over again. It's not going to happen as easy as I'm saying it, but you can see how it can be done. You just have to practice this. And you can see right now, currently price is in a supply area. So I would be looking for a potential area or potential opportunity to take the trade, possibly if it gives me that. But I wouldn't even consider taking the trade at this point. I find oftentimes they have setups that happen near the end of the day. And right now, for us, the market closes at 5 p.m. It's 2:41 right now. And what'll end up happening is price will just hover around that area, maybe going in either direction. You don't really know. And what'll end up happening is you'll end up closing the trade out in a small loss or barely any gain whatsoever. So I try to look for stuff when the market opens up again. So a few hours after it's opened up or earlier in the day. And those are the best times for me. But if you look at this, this is a simple way of marking the charts. You're just looking for areas. You can see how price had a strong push to the downside, breaking structure. You mark your area off, waiting for price to return, and you can see that it did it here again as well. And for the demand zone down here, you can see again, here we are. Price was coming down. Lots of buying pressure in here, breaking structure. We mark the area off as a demand zone, waiting for price to return. If it does, we go down to the lower time frame. I look at the 1 minute, and if you see a pattern that you're comfortable with, you get in on the trade and you can target your next supply area or just before it. And in this case, that would have worked out if it gave you a candle pattern that you're interested in. If you have any questions about this, just leave me a comment. And until next time, bye for now.